I mean, again, naturally, my whole career was focused on institutional participants who tend to dominate the derivative space altogether. Derivatives in general are far more complex financial instruments than interacting with the spot counterpart. And obviously, it's a critical necessity to be able to really manage billions of dollars worth of assets, whether it's for hedging purposes or speculation, and the ability to trade based on leverage, which is the natural way for most institutions to essentially interact with financial markets. It was clear that this one is the space that where most institutional capital will gravitate towards eventually. Two, it is pretty much the largest opportunity for growth on top of the digital asset space. In 2021, when I quit my job and started building Kemet, options were barely just picking up on Deribit and maybe a couple other venues. There was some OTC action, but it's still very limited. And, it was clear that there's a very large opportunity for growth that's going to be happening there. Perpetuals were a massive success when they were introduced, and their volumes kept on increasing. And the more that kept on happening, the more that, institutional players started showing up to the space. So it was clear that that is where most of the growth is going to be happening. As a byproduct, that's where most of the pains are going to be required to be solved. And I think that, myself and my team, we were incredibly equipped to bring in some of that TradFi experience into the space and be able to solve for what we anticipate is the next iteration of the financial ecosystem altogether, right? So if we want a lot of those big names to start interacting with these instruments, it's not just a button that they can click on. It's not as straightforward as it is in TradFi. Someone had to come in and build the pipelines, pave the road, and provide an easy path into liquidity and into managing the trade lifecycle around these instruments.